Well, guys, am I in trouble today? Certainly am. We're going to be trading the Forex pair US JPY.
Matron, take them away.
And a warm welcome to one and all. If it's your first time here, I'm the big fella Scruff, and what I'm trying to do is put trading in the real world. Maybe show you a trick or two along the way. So if that sounds good, do take a second to hit that little subscribe button. Genuinely helps, and we'll crack on. So what am I banging on about in trouble? Well, I don't particularly like trading the USD JPY. Every time I've been burnt, it's on this pair. So I'm kind of snake bite fearful, if you like. And it's not a good way to trade. However, I always feel I should back up what I'm talking about when I speak to the guys. And when I'm saying that here, I'll show you. Because I'm about to switch this off. Every morning, we have chats and I try and keep ahead of the game. Now, there's a video of the exact breakdown, what we're going to do. Got the key levels in. We've also had a face-to-face chat this morning here where we were discussing that particular pair, how it's marked up, how the Fibonacci's have lined up, and key levels, etc., and what we think about the market. They're really good chats, and we have different disciplines each morning on those face-to-faces. It's Markup Monday, where we deep dive a given market. Troublesome Tuesday, where we deep dive into areas of, well, just things that trip us up. Winning Wednesday, just the reverse, things that make us win. Thoughtful Thursday, where it's your mindset, and then Free for All Friday, open Q&A. A little bit more in depth than the ones I do on a Sunday night, and if you missed it, last night we had a very good live stream as well. But what's this got to do with the price of bread? Well, this is a good community of guys. But I put my head on the block and I tell them what I'm doing before I'm doing it. Now, when we're looking at strength, this went in very early morning. The actual US JPY was pulled up as a good contender. These are the majors. And it's also up here as well. So it's telling me there's going to be some movement today, good movement. And how else can I see it? Well, there's a change here. There's the US, incredibly strong. JP, not so much. If we look over here, the US has gained ground, JP has lost ground. So again, plenty of movement. So what else can we do? Well, I put in biases. So what I'm looking at the moment is a short-term sell. It's telling me to monitor it over this next hour. Well, it's currently 9:30. I've been watching this because it told me to wait. The guys see this constantly. They know exactly what I'm up to and when I'm going to trade it and how I'm going to trade it. Well, if I'm going to short this and I have to wait, there has to be reasons why I wait. Well, let's have a little look. I've got key levels in here of attraction. Now, I can either trade into this blue line or I can wait for it to break the blue line to run further into this. Now, because I'm going to short it on a short term, I'm only going to be looking for about 10 pips. I don't have anything running, no orders in, and it's a clean week. All right. I don't have to go mad this week. And I'm going to show you for why I don't have to go mad. It's the end of the month, and you should never really tempt fate more than you have to. Now, if I pull onto my calendar and we have a little look at this, just pull up my wage portfolio. There we are. I've had a phenomenal month this month, so I don't need to go mental. I'm doing very, very well. I'm paid, well, I'm more than paid, and I'm actually way ahead of where I need to be. So all I'm going to do today is 10 pips. That's all I want, and I'm doing this for Danny. Little salute to you. And if I get this wrong, I'm coming down to your house to kick you in the arse. I genuinely am. Why? Because I didn't want to do it in the first place, but I'm going to do it for you. How are we going to do it? Well, the first thing, we need to understand what the market is trying to achieve. Well, we can see it's in a clear uptrend. Clearly. Right. Well, if that's the case, where's it pushing to? Well, it's going to push to all of these levels. And it's going to look for areas that it's stalled. Well, that would be here. This point here. So it's working its way through this. Look for the orders that were sitting above there to push it higher into this. If it breaks through this, it'll push onto the base of there. Breaks through the base of there, it'll push up onto here. But that's a long way to go. So what's it going to do in the meantime? Well, in the meantime, it could set up for that, which is why this could be short. Drop it to the 4 hour. And what we see, push, down, push, down, push, down, push. But this is a sustained down. You can see the range there. Flush out, back down again before it moves up. It's running out of steam. There's a lot of green here. And when there's a lot of green, well, that means orders can be soaked out. This was excessive. We know when it's excessive, it'll retrace. Okay. Well, if it's going to retrace, it'll retrace into these levels. Now, the one that I'm paying attention to are the lower ones. If it runs through, then it'll start looking to sweep back underneath these and then back down, and that could be a sign of reversal. But the high time frame is not showing that. Okay, but there are oscillations throughout the day, and you've got to be a bit careful. So I look at an anchor chart. Well, what's my anchor chart telling me? Well, we have 3 phases to a move: the drive, the consolidation, then the reaction. Well, the reaction can be a break of this or a break of that. Or if I'm looking for this consolidation to continue, it could well be just a range bounce here before. So what I now need to work out is how far it can move. Well, if I put on just a little tool so I can show you what 10 pips looks like. There we are. I can find 10 pips quite easily in this section. I can find 10 pips quite easily in this section. So that's all I'm doing. I'm just waiting. And the game here is, that's a range. Let it run to the top of it for it to retrace back on itself. Happy days. Simple. So let's see how else we can break this down. Take it a bit deeper in. Well, there you are. You can see the range snaking across. Nice pressure to the upside. Where's the logical point of entry? Well, if it's not breaking this, I have to assume that entry is up here. Now, I like to see a chart show its hand. Well, it is showing its hand. Here. Here. 2 attempts at this. All right. Conservatively is that one. You know, this one here. Where you wait for it to come, break that, and trade it into here. Aggressively, or if you're going to be scalping for 10 pips, is to look for the breaks inside of this. Where are they? They're the base of the candles. Take it in a little bit further, 5 minutes. This looks a little bit nicer. Now you can put fibs inside fibs. That is a strong aggressive move. Right, okay. Let's see what we can see within it. Well, if you pull that down onto there, just like so, there's an entry point if you were retracing up to the 50, the stall. But that 76 can work as well. So that can be an entry point to come back on itself to the 50. And the 50 happens to be on an aggressive move. Simple. It's using fibs and levels, etc. to your advantage. Now, at this moment in time, it's not quite ready, but it's not a million miles away. Let's see. Yeah, I think I'm just going to hang fire with this for now, and I'm just going to watch it. So I'll leave the camera running, and we'll see if it pushes up a little bit higher, and then we'll see if we can catch the retracement and get some money out of it. Okay. Okay, guys, it's coming on for 12 o'clock. In fact, it's just turning 12 now. And I'm going to look to close this off because there is a news at 1:30. And I kind of want to be out of the equation before then. So what I'm going to do is I'm just going to watch it for a couple of minutes just to see if it'll push over. If I flick that on, we're up to 65 quid for the morning. And I kind of want to see it do 100 quid. Now it's teetering it here. There is a little bit of a change of circumstances because it's pushed up, but we can see the pressure coming in here, which is a kind of a worry to a degree. So if it isn't retracing into here, it looks as if it'll push to the other side. So you just got to be, it depends. With the news coming, the news might slam it down to push up, but then again, it might rocket off the other way and then you're in a world of pain. So it's clicked over onto 35, 40 odd. So if I close that off now, boom, that's it. That's it done. I'm quite happy with that. Why have I done it? Because I think it's the right thing to do. If I look at the 5-minute chart, I can see there's a cluster point here, which it seems to be struggling on. It's going backwards and forwards to it. And it may well just decide, right, I'm coming shooting up here to revisit the tops of here. Because there is sort of a sustained move there. If I drop it into 15 minutes, just so that I can highlight that, you can see it's sustained, sustained, sustained. But now these tails are coming in, showing a little bit of sort of weakness to that move. So I've just capitalized on it and closed it off, which has given us a total of 106 quid for, well, a couple of hours work. I mean, I could have had a couple of extra quid there, but I'm not overly fussed about that. So there you go, guys. That was for Danny. A little salute to you, my friend. Did I want to do this? No, didn't. Is it my nemesis? Definitely is. Absolutely hate this market. But that's not to say that I won't take it on and have a go at it. So maybe that's my point of difference. I put my head on my block, and I'm going to sort of shout out to Jim. Now, this is a blast from my past. Jim is a chap called Jim Barton, and he's probably the most decent human being I've ever met in my life. And if I ever took anything from trading, I took it from him. He always said, keep it simple. Levels is where the money is. The money's made between the lines. And he is so true. Find your range, work between them, and you'll find the money. Simple stuff. But it's simple stuff that many people forget. You know, they forget how they learn to trade in the first place and the reason that they do learn to trade. And what I mean by that is, if you forget the basics and you forget who taught you and why they taught you in the first place, you then start getting lost in the noise. And once you're lost in the noise, then ego takes over. And ego breeds greed. And that greed will destroy your account. So sometimes it's nice to go back in time and just remember where you came from. You know, if you're a millionaire, were you born to be a millionaire, or did you build it up? You know, I came from a council estate, and I ended up living on a very posh estate, you know, but I never forgot where I came from. I'll always make somebody a cup of tea. I'll always say hello to them. Whereas you have others that, I've seen it, they think, right, I've made it now, you lot are peasants, I don't need to speak to you anymore. That's not the right way to look at life. Always remember where you came from. And in trading, it's exactly the same. And it'll keep you grounded. And if you're grounded, you'll be successful. Simple stuff. So there you go. Sermon according to Scruff. So I'm going to have my lunch. I'm going to go off, have a bit of golf this afternoon, because that's the other part of trading. I trade for freedom. Very, very simple. Freedom to do what I choose when I choose. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.